Hey guys, Daniel here and welcome back to the Finance Channel. Today we're going to be covering the 5 main risks when it comes to Voyager Digital stock, ticker symbol VYGVF. I think as investors, we sometimes become a little too optimistic when it comes to a stock that we invest in, and don't properly analyze the risks. Now I hope not to be too overly pessimistic when it comes to Voyager, as it does make up around 30% of my portfolio, and it is my biggest position. So I hope to analyze these risks and help you interpret them into how they can develop into something that creates a bit of a correction or possibly a crash for Voyager stock. Now the first risk is a decrease in the monetization rate of assets under management. Now to properly interpret this, we first have to understand what assets under management are. This is essentially the amount of customer assets held within Voyager. Let's assume that one account has around $5,000 in it. That is $5,000 of Voyager's total assets under management. So with this, assets under management for Voyager are now at around $1.2 billion, meaning that collectively, Voyager stores $1.2 billion of customer assets. Now the monetization rate is the percentage of this asset under management that goes directly to revenue. Now currently this sits at around 19.8%, meaning that for every $1 billion that Voyager stores, around $198 million go directly to revenue every single year. Now, this is a bit of a risk, as it is pretty high compared to what management expects to happen over the next few years. So what's the risk here? Assets under management falling below management's expectations and going possibly to 5 to 6%, which is what some analysts expect. So to properly analyze this, we have to understand how Voyager gets their revenue. One, they collect revenue from interest, and secondly, they collect revenue from each transaction. Currently, banks and institutions are in need of crypto liquidity, meaning they're willing to pay extremely high interest rates for cryptos. When you hold Bitcoin, Ethereum, or the VGX token, or 20 other tokens on the Voyager platform, you collect interest. This is because instead of just storing your Bitcoin or your cryptocurrencies and not doing anything, Voyager lends them out to banks and institutions which pay hefty interest rates. And you get around 90 to 80% of that interest, and Voyager takes about a 10 to 20% cut from that. Now, this is one of the main the second main revenue source for Voyager. And this could possibly decrease over time as liquidity increases in the banking system and as it becomes more efficient. So as this decreases, again, a part of Voyager's revenue will also decrease. Secondly, Voyager collects revenue from each transaction that goes through the platform. So let's say I want to buy a Bitcoin. There is a bid price and an ask price, just like when you sell a stock. And there's a little gap in between that. So whenever you want to buy a stock, you have to pay the ask price. And whenever you want to sell a stock, you have to pay the bid price. And there's usually a bit of a gap there. I think it's around 1 or 2%. Voyager collects that gap and takes that as their revenue. Now, as time goes on, there is a chance that this gap decreases as more volume comes onto the platforms. So given that, that could also be a risk of Voyager possibly collecting less money from each transaction. And currently, a lot of people are trading on their platform, which means that their turnover rate when it comes to assets under management are currently 1.5x, meaning that every month, 150% of Voyager's assets are being traded, sold, or bought, which is very, very high. As time goes on, this is expected to decrease, and as that decreases, it means less trading, which means essentially Voyager collecting less money. And it's also one of those things that could decrease Voyager's total monetization rate of their assets under management. And in my opinion, I think 10 to 12% is pretty decent in terms of an estimate. So I think management is right for that, but there is a chance it goes lower. Now, what's the counter argument for this? One is the release of new products. Voyager is expected to release new products, services over the next few years here, and that could be a big source of additional monetization for assets under management. One of the few that stand out here are your debit card, credit card, or margin. Voyager introduces margin. That's a source of revenue for Voyager, as customers will pay interest to Voyager for lending them out money. There's also a credit card and debit card where Voyager will probably collect a little percentage from each transaction, which is also beneficial. So we'll see how this turns out over the next few years here, but if assets under management do dip below that 10 to 12% target, we can expect a bit of downward pressure on Voyager, as this means less revenue. Now, the second main risk is a crypto kind of cold winter or a bear market. Now, what are the main risks with this? In 2018, we saw a crypto bear market where almost everyone was panic selling, and it was almost like crypto was forgotten for about 1 or 2 years. Now, if this happened again, this would be big risk for Voyager for 4 main reasons. Less trading. Voyager collects money from each trade, and if there's less trading, we can expect less revenue. A lower asset under management. Voyager's assets under management are directly held within Bitcoin, Ethereum, and other cryptocurrencies. So if those currencies went into a bit of a downtrend, same goes for their assets under management. Now, one of the things that you can counter this with is that Voyager is expecting to get into equity trading within the next year or 2. So, again, if they get into equity trading, that's decent, because in that sense, if there's a crypto bear market, that doesn't necessarily mean that stocks are going into a bear market as well. Look at 2018. Crypto went into a bear market, the market was in a bull market. So that's kind of how we look at that. Again, a smaller or a slower growth in accounts. In 2018 to 2020, early 2020, there was not a lot of interest when it came to Bitcoin. And this could happen again. And if we do go into another Bitcoin bear market, there is a chance that less people are interested in going into the Bitcoin market, which could result in less accounts for Voyager. Next is people leaving Voyager. If we get into a bear market, some people may get frustrated, panic sell, and just leave the platform, which is definitely a possibility. Now, what are the chances of crypto experiencing a bear market? I don't think they're too high, as crypto is fairly backed by fundamentals currently. There's a lot of people getting into the crypto market, and there are a lot of institutions and companies adding Bitcoin and other cryptos to their balance sheet. A recent example of this is Tesla. So if we have more companies, maybe Apple, Microsoft, or Google, that add Bitcoin to their balance sheets, that's another great validation of Bitcoin, and it might be one of those things that kind of helps Bitcoin stabilize around its current prices. The next risk here is Voyager's inability to scale. A few weeks ago, Voyager experienced a crash on their platform due to unprecedented growth. There was a time where Voyager was experiencing 100 new accounts a minute, and Voyager app crashed. Now, currently, there is a bit of a wait list for Voyager, as there is such a big demand for the platform. And they say they're scaling, and I know they are, but there is another risk going forwards. Now, again, what's one of the things that can counter this? Steve Ehrlich, the CEO, was someone you can believe in. He created E-Trade, which is one of the biggest brokerages here today. And he knows the challenges of scaling and understands how to kind of combat this and make it stop happening going forwards. They also have the company that scaled Uber working with them to scale Voyager. And after this kind of new system that they will be integrated, they'll be able to handle 10 million active accounts at a time, which is about 100x from where they are currently. So unless you think Voyager is going to grow about 100x in the next few months, I think we're good to go. So the next risk here is a possible platform hack for Voyager, and I think this was always kind of the biggest risk. If Voyager's platform ends up getting hacked, that is a very bad thing. Let me just leave it at that, as there would be a lot of assets going missing, there'd be lawsuits, and it wouldn't look pretty, I'll tell you that much. But I think this is kind of a risk for all brokerages and almost all companies. Now, what's one of the things that we can kind of counter this with? The fact that Voyager recently signed Daniel Costantino as Chief Information Security Officer. Voyager was already a very secure platform and, very secure in the sense that their assets won't go missing. And recently they signed this gentleman who has a lot of experience in the cybersecurity space. I'm not going to read this as I don't want to take up your time. If you want, you can, and get a better understanding of who Daniel is and what his background is in this. For me, it's not that big of a worry, as Voyager is already a secure platform and will continue to become even more secure in the sense of cybersecurity as we go on. But it's something that we have to look at. If this happens, this is not good for Voyager and could lead to a crash. Risk number 5, and the last risk, is problems with international expansion. Voyager is expected to expand into Canada kind of by late March, early April, and Voyager is expected to expand into Europe by this summer. Now, currently, they're expecting this to happen, and they filed with the various kind of exchanges and security commissions in the following, in Canada and in Europe. If this goes well, great. But if we get some delays and possibly some short-term noise, this could lead to a temporary correction when it comes to Voyager. Now, in my opinion, this is just short-term noise, as eventually they'll be able to get into these countries. Fairly certain they will be able to, and this won't be a problem going forwards after that. I think Canada is a big market for Voyager, especially given the fact that there aren't that many commission-free brokerages on the platform, especially for cryptocurrency, and especially if they get into equities, and especially Europe as well. This just opens a lot of doors for Voyagers, and if they have some problems, we could expect a bit of short-term noise and downwards pressure on the stock. So, earnings, this is just for you guys here. Earnings for Voyager coming out Monday, March 1st. Mark your calendars. There will be a conference call at 5 p.m. Eastern Standard Time that same day. It's going to be big. We'll get a lot of insight into revenues for February, most likely. Guidance for this year. It's going to be big. I'll leave that. I'm going to try and, I think my position is pretty fully built out. Unless we get a further correction here in the next few days, I might buy some, but I'm pretty comfortable where I'm sitting at here today. Voyager at around $15 per share, been consolidating for the past kind of 2 weeks here. But anyways, guys, I really hope you enjoyed this video. If you want to see any of my Voyager content, just look at my channel. And if you enjoyed this, make sure to drop a like. If you're new, subscribe. Thank you guys so much for watching, and have a great day.